Short squeeze continues as stocks move to new records. Transportation stocks have confirmed the Dow theory. I'll explain what that is. High yield bonds have a bearish divergence versus stocks. Let's see how important that is. And currently dollar is vulnerable to selling following a sizable rally of the 52-week lows. Gold is feeling this and is approaching records. And so far Bitcoin has failed to go higher. We'll look at Bitcoin and Solana and see if it's about to break down or perhaps to rally. All this and more in today's edition of Market Recap for Friday, October 11th, 2024. This is MasterChartsTrading.com. Please remember to hit the like button, subscribe to this channel, share this video, make a comment on the video. If you're a subscriber, stay tuned. We'll be covering various securities, namely market breads, large ETFs, large cap stocks, quite a sizable amount of speculative securities, and some of the gold related ones. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com market or the price action indicators, which you can see on this chart, this green, blue, red, and yellow line. You can find out more by following the description link in the video show note captions and sign up on my site. All right, let's look at S&P 500 today. Right now, we're currently looking at the actual index S&P 500, and I want you to take a look at this gap up that we experienced between 18th and 19th of September here. So notice this right there on the 18th of September, and then versus the next day. I'm going to zoom in a little more. So notice there's this, it's actually technically a partial gap because you can see the tails are sort of the same area, but the point is that we gapped to new records. So when we gap to new records, that's usually an indication of very strong buying pressure, lots of buyers. And then additionally, we're experiencing what's called a short squeeze. So what's a short squeeze again? So a short squeeze is basically when people who think that the stock market will go lower, let's say they shorted somewhere, for example, previous highs, or actually previous highs were right there, July 16th. But then we kind of tried to get to the previous highs on Friday, August the 30th right there, and then next day sort of moved lower. So let's say back then you decided that yes, this is indeed the top and we want to sell it short. So you went ahead and you borrowed the stock for S&P 500, sold it in the open market, and now are waiting for this stock to continue lower so you can buy it at lower price and return it to the rightful owner. So that's, an essence of short selling. Now, of course, sometimes you're wrong and we need to set a stop somewhere. So a short stop normally is set above previous records. And at the time, previous records were right there at the July 16th high. So let's say you sold it short, the security on the 3rd of September. It went a little bit in your way, maybe it made a little bit of a profit, but then it turned around and it just continued higher. On the 18th of September, you're like, okay, we're getting close to my exit point, because if I let it go, then, my stop will not be honored and who knows what's going to happen. And so on the next day, let's say on the 19th of September, you see that there was a gap up to new records and you need to cover your short. So you buy on the open market, you return the stock to the rightful owner, and you lose a little bit of money because you probably bought it lower where you sold it. So basically, this is the essence. You need to borrow, or rather, you need to buy a stock on an open market at new record highs to return the ones that you borrowed, the ones that you shorted. So, and this continues until all of those shorts are squeezed out. And notice that this has been happening. Basically, we've been making higher highs and the mildly higher lows, and today we closed at new all-time highs. So this short squeeze continues, and we can find out, you know, how far this short squeeze will go by looking at, for example, weekly charts. So currently we're looking at the each candlestick is a week's worth of activity. So I want you to take a look at the pattern that I'm about to highlight from the highs on the 8th of July until the highs on 26th of August. Okay, so it's like a V-shaped pattern. So the depth of this V-shaped pattern is about 10%, and we broke out above that pattern on 16th of September. Okay, and now we're basically making higher highs. And so normally this type of patterns, they get duplicated on the upside. So depth of this pattern for S&P 500 was about 500 points, and at the time it was at around 5,600 level at the time of breakout. And so we're expecting a move to around 6,200 currently with just this pattern. When is it going to happen? I mean, if it just continues higher at this current trajectory, then we'll get there sometime by December. It could be sooner, it could be later, but as of right now, this pattern is in force, and I think we will see new records continue higher and higher from here. So this is the essence of short squeeze. We're witnessing it as we speak, and we're hopefully long. We're not short, obviously. We're at least definitely not selling short. We're buying stocks. We're not selling them at this point. So new record highs. If you're still long, congratulations, and we'll continue looking at more opportunities. So this is now we're currently looking at Dow Jones Industrial Average. We just made a new record. We closed at new all-time high at 42,863 or so. And this is you know, for Dow Jones, there is a theory where way back when when Dow Jones specifically created this index, he said that if we have Dow Jones and transportation average move together in lockstep, so in other words, if one is making higher highs, and the other one should also be making higher highs. And if that is the case, then we have a true bull market, and confirmation of that bull market is it just occurred again today with IYT transportation sector moving to fresh all-time highs. So we're seeing confirmation of the Dow theory. You know, we were at new records for the Dow Jones Industrial Average, and we're at new records for IYT transportation sector. So no divergence there. If you subscribe to the Dow theory, then congratulations, we're in very good shape. The only thing that I can see right now which could be considered a negative is the fact that high yield bonds, now high yield bonds normally correlate highly to the S&P 500. So let me just show you the correlation coefficient. Okay, so there is the correlation coefficient down below here for. Okay, so we're looking at correlation of high yield bonds to the S&P 500, and down below here you can see that most of the time this correlation is positive. So in other words, when stocks move up, high yield bonds also move up. So we're seeing something similar up till recently, namely up until this breakout to new all-time record highs on the 19th of September. Yet high yield bonds moved lower since. I mean, today they sort of gained, but we're still below the recent peaks versus the S&P 500. Notice that on 19th of the September we continued, we broke out to new records and continued moving higher. So the only thing I can see right now is that high yield bonds are slightly diverging from the S&P 500. This is a called classical bearish divergence. Will it actually matter is a different story. We will see if it actually gonna matter or not. For now, I mean, I'm not like horrendously worried because it's not very bad, and additionally I think we're kind of closing this gap. So let's see if this becomes an issue in the next few weeks or so. Looking at the dollar, this is DXY, dollar currency index. So dollar broke down into a new downtrend back here in August of this year. But now, since the late September, early October, there was a strong rally. In fact, there was several weeks of just non-stop gains. So right now we're above this red support resistance line. And usually, if you're in a downtrend, you want to sell it. You want to sell the security around this area. So the dollar is currently overextended in the opposite direction of its primary trend. The primary trend for the dollar is down. However, the recent rebound took it well into the overbought territory. So when security in the downtrend is overbought, we want to consider selling it short. So we're really pretty high up right now, and its dollar is indeed vulnerable to this type of selling. You can look at the euro versus US dollar. Euro versus US dollar currency pair pulled back in favor of US dollar on the bottom, and now is below this blue support resistance line. So if euro closes again above this line, which is at 1.09526 currently, then that would be a buy signal for the euro and a sell signal for the dollar. If indeed we're seeing a topping out of the dollar, then gold should benefit even further. So XAU divided by USD, the bottom part of this equation is getting smaller, weaker. Dollar is getting smaller, gold is getting bigger. We're not seeing a very strong correlation currently to this. Usually dollar versus gold have a strong inverse correlation, but as of right now there's a poor correlation between dollar and gold. Notice that this rally for dollar from the lows in late September till now barely translated into any sort of weakness for gold. It was just not really there. And now we're actually very close to new records again after 2 days of strong gains. So looks like dollar might be rolling over, and that would cause gold to appreciate it even more. So in other words, if dollar rolls over now, then gold will certainly break to new records. And if you're long gold, I would continue holding. So previous alerts, you can see around the blue line, very nice move now. This downward facing arrow is not really an alert. I was just sending this to my subscribers saying that basically at this point gold is very close to records. So if you decided to sell it short, your risk would be like very small. It's not really something that we normally do, but sometimes people like to have ideas about looking for tops. And let's wrap up with cryptocurrencies. So let's look at Solana first. So Solana has found support on now 4 occasions. Notice at this red support resistance line. You can find out more about this by going to my description, by going to the link in the description. But notice that back on August 5th, around September 6th, actually even through September 16th or 18th rather, again here on the 3rd of October, and yet again on the 10th of October. The price tried to pierce through the red support resistance line, but so far has failed. So generally speaking, to me this looks like it's a support level that is holding for Solana. Now Solana is not like terribly important, but some people do like to trade it. Bitcoin, of course, obviously is much more, it has much more volume and is traded much more, there's more trading with Bitcoin versus Solana, obviously. So it's the opposite. Bitcoin is trying to get higher, like towards new all-time highs, above like 70,000. And notice this upward facing arrows around the blue line. So basically we tried to get up there on multiple occasions, and so far really have not been able to get significantly higher. So which makes me wonder now if there is resistance up here, or we should just ignore everything and buy Bitcoin. In fact, that's a question of today. Should we just trust the system, ignore everything, and buy Bitcoin right now? Let me know if you have any questions, comments. If you have any ideas about what I've been saying, make a comment, share this video. Don't forget to go to MasterChartsTrading.com, sign up there for my either trading indicators, so the indicators available for TradingView.com, this interface. They're available for TradingView, very easy to set up. You just need to open a free TradingView.com account, and then once you do that, come back to my site and I'll open the door for you on TradingView.com. Newsletter also is available currently, so every day on the trading day I send out alerts. So just quite a bit of various securities that we're going to be covering in this week's video, which is a members only video. That will come in later in today. And of course the best deal is to get both trading indicators and newsletters, and you can get now yearly subscription for an equivalent price of $49.95 per month, or monthly subscription for a price of $59.95 per month. Everything comes with a free 7-day trial, so no need to worry about that. Let me know if you have any questions. Other than that, thank you for watching and have another great trading week. Bye bye.